Hello everybody, welcome back. Let's have a look at some of these coins. We're going to look at Bitcoin. We're also going to look at some traditional market stuff because I suppose what's going on with Bitcoin very well is pretty much basically dictated by what's going on in the larger financial sector, the economy basically, and we've got to work out if this is good or bad for Bitcoin. Definitely in the short term, but if it's going to have a prolonged period. So what I'm talking about first of all, so we can see the Bitcoin's still, snaking down. Sort of made a lower high and could quite easily now start to put in a lower low on the daily. A lower low would be anything below this wick, and more than likely we're edging towards around 42, 41, 40, 38. Who knows? We're not really sure yet. Now, before I go any further, it's not. There is one little glimmer of hope, which is this stimulus package, which is due to get passed, I think, this weekend, and weekends are often bullish for Bitcoin anyway, and so with that as well, plus traditional markets obviously being on hold, there is a chance that this weekend could end up seeing a bit of a rally, but that remains to be seen, and that's based upon just the fundamental side of things, the expected move due to a stimulus package being signed and passed, not yet obviously handed out and delivered. So there is that glimmer of hope, but putting that aside, because without thinking about that, let's have a look. So basically, we are below the majority of moving averages that we would consider to be important on this kind of time frame. So we've got the centre of the Bollinger Band, we've got the 10, we've got the 21, we've got the 7. It's looking pretty top heavy now, and we could easily be coming down to form this new low, a lower low perhaps, maybe not instantly, but a trickle down. I suppose bear market. So in bear markets we've got to act appropriately, and there's a variety of different ways we can go about acting appropriately. We can short if we've got the stomach for that kind of thing. We can use down tokens if you again have the stomach for that kind of thing, or you can hedge with a very large bot with a large grid that can sustain both up and down moves and basically profit you throughout. So there's other ways you can deal with bear markets without obviously shorting or using down tokens. You could use down tokens with a bot as well. That would be more profitable, but you have to be absolutely certain that you are in a downtrend. At the moment, we've not formed a lower high. A lower low. So before we go into all of that, and to be honest, I think I'll leave that for another video. We're going to have a look and address this. This is the monthly Dixie chart. Okay, so again, when we're talking about chart formation, we do have a high here. We've got a lower high here. We don't have a lower low actually yet. This is the monthly chart, and this was the last time that Bitcoin put in its all-time high, as in its previous all-time high at the end of its bull run. So you can see the correlation between that and this devaluation of the dollar. We've spoken about this quite a few times months ago when we came back down to visit this 200 exponential, saying that we have to, I suppose, be careful that this could bounce from here. It would also correspond to the way that it worked here 4 months in a row, and then we rallied and basically Bitcoin devalued 85%. Now, I'm not saying that's going to happen this time. That there is a correlation here. Definitely there is. But the economics situation right now doesn't really hold too much weight on this rallying from here. However, there's always a possibility that it would. The reason, in my opinion, that this has pumped so much over the last 24 hours or so was because of this and this. So this is gold. This is gold on the weekly. You can see for several months now, it's basically putting its top over here, and it's got a failed cycle. It's broken down not just below the centre of the Bollinger Band on the weekly. This is the 20 weekly moving average. It's also now gone below the 50 exponential moving average. It's looking pretty nasty for gold here on the long-term time frames. In fact, it's looking really nasty for gold, and in my opinion it will continue to be nasty for gold. We could even retrace a further 9% or so. This is the Nasdaq, so American tech sector, really falling down now, broken down, and it's not closed yet, but tonight it will close below the 20 weekly moving average. We all know what that means for Bitcoin. It means the same for any chart. 20 weekly is basically the beginning or the end of an uptrend, bull market or bear market, depending on which side of it you're in. So we are below it at the moment. The weekly could obviously pop straight back up if it wanted to, and we could close above it. The last time we came down here was a COVID crash. So yeah, the top was in, crash here, closed below it, closed below it, closed below it, got pretty nasty and supported on the 200 exponential moving average. That's where we found our V-shaped recovery that we're all very privy to at the moment. So putting that and that into perspective, what does that mean for this? Well, actually, if you look at this chart, for the moment it's holding up relatively well. So the idea of this being a store of value currently is actually still holding up, but can it continue to hold up? That's the thing, because if Bitcoin picks up momentum into a downtrend, we all know what that can look like. Even in 2019, let's go back to 2019. So 2019 we had a really big bull run, parabolic basically, and then we broke down, up, formed a lower high, down, another lower high, big drop down. That was a fundamental that was a Chinese pump, but essentially it couldn't stop the momentum. And from the absolute top, we'll measure it from the wick down to the bottom of this wick here, there's a 53% retracement. All right, so if that were to happen for Bitcoin, a 53% retracement from this top here would bring us down to the levels of, well, they would bring us currently down to the 200 exponential if we did it today, which I'm not saying we would. Bear market would take a reasonable period of time to play out. Let's measure this top here, 53%. Where would that take us? Below the 50 weekly. I'm not saying that the 53% or anything is particularly an important thing to measure, but from where we are at right now, the 20 weekly moving average is currently below us by another 37%. That's appropriate, I would say, in a bear market, especially, this is a bear market within a bull market, all right? So you've got to put that into perspective as well. It's not the worst thing in the world to ever happen to Bitcoin, but on this weekly it doesn't look pretty good at all. We've got a bearish engulfing candle here. We've got a nice retracement already from what we've tried to achieve this week. It does actually look at this stage that the top is in for the moment, and maybe a bear market may continue. Now, this is one thing I've been talking about for a while. This is the uptrend that was formed on the money flow index, and we didn't think we were going to come down to touch it for a while. It looks like we may end up touching it before long. If we do end up touching that, that to me would signify a potential bottom, or at least an area for a decent bounce. If we break down below there, then the bear market will kick into overdrive. But for the moment, we're jumping the gun a little. We've got to work out what's going on. So let's go back to the Dixie on the daily. So this should have been the support. The resistance. Resistance formed here, and again was respected there yesterday, but it's pumping today. Now, what is causing this pump? Right. Think about it. If you're not into stocks and things like that, think about it like this. If you're selling crypto to Tether, what happens to the market cap of Tether? It goes up, right? Because there's more money goes into Tether than is in the cryptocurrencies that people have been buying. So people find their store of, I suppose they protect their wealth, don't they, by moving into Tether. That's kind of what's going on with the Dixie, kind of, right? So the Dixie is increasing in value because there's a sell-off in stocks. There's also a sell-off in commodities. Which basically means that they're selling to what? They're selling to dollars. That's where it's going. It's going into the dollars. So the market cap, essentially, this is one easy way to explain it, an easy way to think about it. It's oversimplified as well. But the market cap of the dollar is increasing because people are selling. People are selling this, and it's going into this. So that's what's going on here. So these movements down aren't a direct correlation to this moving up, but they do amplify each other's moves. The further this moves up, the more this moves down. The more this moves down, the more this moves up. The more this moves up, the more this moves down, and so on and so on and so on. And by default, Bitcoin moves down because Bitcoin is generally valued in Tether, which is pegged to the dollar, so it's going to feel the burn of both the sell-off of this, the sell-off of this, the pump of this. It's going to correspond to this. But so far, it's actually doing okay. It is holding up relatively well, all things considered. But if we are in a downtrend, we have to treat it as a downtrend. Now, one thing that we noticed yesterday was that the Ichimoku conversion baseline cross has taken place here, which meant that this uptrend that began here has effectively come to an end here. Now, last time we did get a cross down here, we only retraced a further little piece by about another 13%. Another 13%. I'm not. Yeah, like fractal moves aren't the be all and end all, but 13% from here would take us to 41,400. that's not the way to look at these things. I mean, this isn't telling us where it's going to go to. This is all of this is telling us is that if we got in here and we were hoping for a continued uptrend, that uptrend has finished, then we should probably get out, to be honest with you, if you're trading this signal alone, which is usually a pretty decent signal to be trading. So it would appear that the uptrend has finished already, and it's looking to find a new it's looking to go down. Basically, we're looking to make our way down. So, if we are in a downtrend and we're looking for lower lows, the obvious place for me would be, first of all, it would be this green 50 exponential or this purple 50 moving average. This is coming in at around 42, this is coming in at around 43, and we also have this resistance here, which is about 43, almost 44. So these zones here are looking for probably the area for a drop down to before and get a decent bounce from there, first of all. But if we're in a downtrend, the way it's going to work is that this moving average here, the centre of this Bollinger Band, is going to inevitably start to curl over, probably a bit more rapidly than that. I'm not very good at drawing these sort of things, but that's the kind of vibe that we're looking at, a kind of a move down like that. And then what this will do for the price action is that if we do bounce from here and we have a significant bounce, we'll probably move our way up to it and bounce back down, make new lows, bounce back up to it, make new lows, back up to it, make new lows. As this is a resistance that was facing down, the high points, the areas to break up against, are going to be lower and lower each time. So if you're looking to buy the dips and sell at resistances, the resistances will be lower incrementally each time. That's what forms the downtrend, basically, and that's what a downtrend is based around. So just as we used them on the way up to get supports on and buy the dips, now what we would look to do if this downtrend continues and is confirmed, what we would be looking to do would be, buy the dips, surely, but be careful when you come up to test the resistances. Now that's just the 20 moving average. There are other moving averages which would hold relevance too, which is this 10 exponential. Just as in a bull mode we use that as support, I would also expect that to become resistance at this point now, as it already seems to have been done today. That's the 10 exponential there, looking like it's formed a resistance already. So we might not even get up to the centre of the Bollinger Band. You could hope that we would, but we might not even get that far. So in that respect, this moving average is going to start to snake down even faster because it's an exponential moving average. It will kind of look a little bit like that. So if we're looking to buy the dips, then perhaps maybe even sell those bits there. Buy the dips, sell that, buy the blah 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 blah. You see what I mean? Now, no one's really going to be able to tell you where the bottom is. If this is a downtrend, no one will really be able to tell you where the bottom is. But there's a few things we could think about. Educated guess would tell us, if it's not going to be that particularly nasty, then the last time we bottomed out was the 10 exponential on the weekly, which is coming in around about 40,700 at the moment. If that breaks down, then the be-all and end-all for most people is going to be the 20 weekly moving average. You would like to think that that's where we get supported from. Unfortunately, that's not happened so far for the Dixie, and nor has it happened for gold. So it may not happen for Bitcoin, but we have to look at the chart and respect the chart for what it is. At the moment, it really actually has performed pretty well in comparison to stocks and commodities in the way that the chart holds up. I mean, obviously the moves are always amplified. They're always a lot greater. The volatility is a lot greater. But the way that's respecting the chart, for instance, is a lot more healthier than these. So the stocks, commodities versus Bitcoin. Currently, Bitcoin is still way more healthier at the moment. But because it's a smaller asset class, it means that the potential for a deeper and faster correction is always on the cards, because there's a lot less money involved in Bitcoin than there is in Nasdaq and gold, which means that if the plug is pulled and the bear market really kicks in, then the moves will be amplified, and it will catch up with the way that the stocks and gold have performed. It will catch up with those kind of moves. It will break down faster than it took for these guys to break down, for instance. Anyway, I don't want to spread fear. I do want people to be aware that what we're looking at here isn't particularly good, but there is always this idea that the weekend will offer at least a decent pump for us. But it doesn't look to me like an all-time high is around the corner. It is very, very early to say, and the way that the Dixie is performing at the moment is only going to add insult to injury for Bitcoin. And like I say, with these assets selling off into the Dixie, it will correspond to the way that Bitcoin behaves. And if the Dixie does rally, we are looking for areas up here, I would say, around about 92. 92.8, 92.7, 92.8 thereabouts, because we've already broken into this resistance area, at the top of that being 93.3. So I know it's quite boring to talk about things that aren't necessarily crypto, but it is definitely worth understanding, the relationship it has to these assets. It's not that it's directly related to stocks, nor is it directly related to gold, but they do all share a common denominator, which is the DXY, which is the dollar index. And if these continue to fall, and this continues to fall, this will continue to grow. My computer's frozen there, but you see what I mean. The DXY will continue to grow, and if the DXY continues to spike and increase in value, then the knock-on effect will be that the Bitcoin goes down by default. So that's the relationship it has. In my opinion, that is the way to look at it. It's not that it's going to follow stocks, nor is it going to follow gold, but as it will have this relationship with the DXY, and it always has. Anyway, I'll leave it with you there. So, like I say, let's see how it plays out before we really go to town on creating some form of strategy about how to cope in a bear market. There are plenty of ways you can benefit from a bear market. You can actually really, really do very well in a bear market if that's what's going to happen right now. I'm not saying that it is, but if it is going to happen, and it looks like it could, you can either go into hibernation, to, I suppose, protect your assets, sell, and wait for a better time for the sun to shine, or you can try and get clever and implement a variety of different strategies to actually make some decent money in a bear market. For the moment, let's wait and see if we get a lower low formed, and we'll also have to wait and see how these assets behave. There's nothing wrong with sitting on the sideline, being on the fence while a direction of a trend has been picked. If a direction has been picked and it's established, then we can start to play it. For the moment, it very much does look like a direction is being picked. It's not exactly clear that it's in full swing or overdrive at the moment. Anyway, I'll leave it with you there. Thank you for watching. I've got a Telegram chat. It's completely free. All the links in the description. I've also got a Patreon channel where you get access to 2 live streams every single week, and some tutorials on there about some of the indicators and things that I use. And that is also where I'll be posting this weekend a video on how to deal and profit with a bear market. Thank you for watching. Have a nice day and take it easy.